Hello, today, Monday, May 9th, and the market is pretty weak, and it is testing our critical support level of 4,000 or 400 in the spiders. And what's been so interesting about this, and we talked about it in our subscriber note this morning, but what's been so interesting to us is that the selling so far has been pretty contained. We've had a lot of weakness this year. We've had some fairly big down days, but we've not had that capitulation day. And that is what a lot of people are talking about now. Like, hey, we want to see this capitulation day so we know the selling is over. If you look at the chart on your screen here, you could see that we flagged three main areas. And the first is under this 4,200 area where we call it a lower bound. And we discuss why there's sort of max put protection in the market under this 4,200 level and down to 4,000. 4,000 is a critical line, not just because it's a big round number and a lot of people are watching it, but also because there's tremendous open interest at that level. So for that, we're going to flip over to our subscriber tool. And what you can see here is the current call open interest, and this is accurate as of this morning. And here's current put open interest. And if you look to the left of 4,000, there is nothing in the way of calls. No calls exist essentially below the 4,000 strike. There are a lot of calls at 4,000, nearly 225,000. But if you look at puts, there's some pretty big chunky put positions down below this big 4,000 level, with approximately 450,000 puts at the 4,000 strike. So our point here is that, look, this becomes a one-way trade. If we break 4,000, it's a one-way trade. And we don't think that's going to happen. But if it does, that's where this idea of capitulation risk comes into play for us. And the reason is because we think below 4,000, the VIX starts to respond and volatility really starts to respond in a different way. And for that, we're going to flip over to this VIX chart. But if we zoom in just a little bit more here, what you can see is that we've maintained for the duration of this year a high under the February invasion day of the invasion. So in other words, the VIX almost tagged 38 on that day of the Russian invasion of Ukraine. It was an intraday move, but we've not yet broken that level, despite the fact that stocks are materially lower, right, than the invasion day. Again, if you look at the invasion day, we put in a low of right around 4150, let's call it, right? So we're much below that. The Feds come out, they're not going to be supportive of stocks. We're now having crypto problems and the like. Yields are not 3.2. They touch intraday high today. So the number of problems appear to be increasing, right? But the volatility, the implied volatility is not. So in this situation, no one wants to really sell implied vol, right? It's a tough to want to get into selling implied vol. Shorting is a little scary because you could have a 3 or 5% up day very easily in this environment as well, right? So it's a tricky environment, and liquidity is just very poor. When we talk about liquidity, the problem with liquidity is if you don't have a lot of people willing to buy stocks or sell stocks, then when you're a forced buyer or a forced seller, right, because of a margin call, you have to pay a higher price. You're going to impact the market more when you go to trade. So if we kind of look at this volatility S&P move one other way, our friend Danny Kirsch put this chart up. It's a really good one. And this is essentially just the correlation between UX1, which is the front month VIX future, and the S&P. And you can see that there is a pretty strong correlation here that generally when the market goes down, VIX or the VIX futures goes up. And obviously as the market goes up, VIX futures goes down. And today we're getting these moves that the market is dropping, right? The S&P is dropping, as you can see here, and we're getting like a little bit of a move, obviously higher in vol, but we're not getting that new VIX high. It's just not yet materializing. And that's what's concerning to us about the 4,000 level. We think that because it is this pure put position, that this brings the idea of capitulation. Now, we've also said that you need a likely trigger for capitulation. So this is a positioning trigger, we think, for capitulation. But, you look at what's going on again in crypto. There's rumors of margin calls over these. Those are the kinds of things that would just add in this extra forced selling that would maybe finally push the market out of whack. And then you get kind of a VIX that starts breaking up towards 40. So for now, we're watching this 4,000 level very closely. You can see that so far the market is respecting that as support. And if we do get a rally, it could be a violent rally, obviously, but we're looking at those rallies under the context of short selling. So what that means basically is you get to scramble to cover, right? People are going to close their puts. They're going to buy back their shorts very quickly. And that is an unsupported rally. So those rallies are going to be subject to quick reversals. And it's likely going to be that type of environment, we think, until at least May 20th. So if you have any questions on that, please put them in the comment section below. You can hit us up at SpotGamma on Twitter. And as always, if you are interested in trying out SpotGamma, you get free 7-day trial. You go to spotgamma.com, hit subscribe now, and you get a free 7-day access to our materials.